Good morning and welcome to Trade Talks. I'm your host, Jill Malandrino, Global Markets Reporter at Nasdaq. And joining me on set at MarketSite is Phil Davis, who's the CEO of Phil Stockworld, and we're here for a commodity review and preview. Phil, as always, thanks for joining me.
Hi.
Nice to have you back again. And you know what, with all the talk with tax reform and what's going on geopolitically, we haven't focused on commodities in quite some time. And you know what, gas prices are ticking up, so it means something's certainly happening with the underlying.
Oh, well, I mean, this goes back to the thing we talked about back in the spring, I think. The Saudi Aramco deal
Right.
is still on the table, and that's a $2 trillion company. Or, well, the Saudis would like it to be a $2 trillion company that they're going to take public probably in 6 months. And obviously, the entire value of the company, it's a state's oil company, it's based on the price of oil and expectations of the price of oil going forward. So the Saudis just had concluded a meeting of OPEC in last week,
Right.
and they got the agreement to extend the cuts all the way through to next year, and they will do anything. You understand? I mean, you have to understand, $2 trillion is on the line, or let's say some percentage of $2 trillion. Like the broad market doesn't think it's worth more than $1 trillion. Saudis claim $2 trillion to the point where they're now not going to list it on foreign exchanges. They're only going to list it on the Saudi exchange, and they're looking to raise $200 billion, selling 10% of the company for $200 billion.
Right.
They will do anything. A 10% difference will cost them $100 billion. I'm sorry, will cost them $200 billion. So a 10% less value would be $200 billion. It's all contingent on the price of oil, and that means that they will do anything.
Right.
People will kill people, literally, to make sure oil stays up around this price and that IPO goes forward at a good price.
How about natural gas? Because I know you were active in that in
Well,
2016 and 17.
then they're all connected from there, like you were saying,
Right.
gasoline. So if oil's up here, gasoline's going to be up here, despite the low demand numbers that we're seeing. Natural gas is a whole different animal because
Well, you get the seasonality, at least up here in the Northeast.
the
as well.
seasonality, but the seasonality of natural gas is being overwhelmed by the growth, the constant growth of exports of natural gas from America to the rest of the world. Because the rest of the world's average price of natural gas is something like $5, and our natural gas is closer to $3, or maybe even $6 for the rest of the world. So the more we export, the higher our price gets. It kind of equalizes the world. So the more we export, our prices start to drift higher, and the global prices start to drift lower because a new major supplier online.
What about the metals? Even the story around gold has been really quiet. It's kind of been like a non-event this year.
That's because everybody's buying Bitcoins.
Right.
That's everybody's favorite commodity right now is
Right.
Bitcoin. It's not a thing. It's not a currency. It's a commodity. It's just that there are 21 billion of them. Not billion, sorry,
Million.
21 million Bitcoins in the world. They're rarer than gold. They're rarer than diamonds. There's only 21 million. There's a lot more than 21 million diamonds on people's fingers. So think about that. There's only 21 billion Bitcoins on the entire planet Earth, and these people are buying them and selling them and trading them like a commodity, and they're just going up and up. The more people that get interested,
Well, because there's
no
not enough
more
supply,
Bitcoins.
right?
There
Until they
can't
mine
be.
some more, right?
No. Even if they mine some more, there's a
Yeah.
limit. It was a theoretical limit. I don't know how many they've mined,
Right.
frankly. Maybe they've mined 16 billion out of 21 billion or something like that, but that's it. It stops at that point. That's like the theoretical limit of Bitcoin. So they can't be more. We haven't run out of oil, we haven't run out of gold, we haven't run out of silver, but we've run out of Bitcoins. So, that's what's causing the quietness in the commodities is $210 billion has been diverted by the same kind of traders. The people who would be buying gold and silver as a alternate storage of money in this crazy market where everything's booming, instead of buying certain normal commodities that they would put their money into as an alternate investment, people are putting this, you have to think, how much money could there possibly be in the world? $210 billion, instead of going into a lot of commodities, went into Bitcoins,
Right.
or currencies for that matter.
Well, let's wrap it up and talk macro a bit here. As we're sitting here on Monday, December 4th, every average is at all-time highs, despite, well, I guess you could predicate it on the tax bill. Quite honestly, with the run-up that we saw going into the tax bill, I thought you'd see a sell in the news kind of situation, unless the news hasn't been finalized yet. But are you surprised to see this significant reaction?
Oh, no, not today. I mean,
Right.
the market acts surprised about everything after it's announced. It's the funniest thing in the world. I mean, you see these things in the market acts like it's never heard that something like this could possibly happen when it's been baked into the thing. Do you know the Dow is up 36% since the election? 36%. 6%. But we're lagging. The global markets on the whole, including us, are up 54%. We were at global markets, we had a cap of $65 trillion at the election last year. They're now at $100 trillion.
So if we're lagging behind, are you suggesting the U.S. is still a value play?
No, I'm suggesting the whole world has gone insane.
Right.
You think about it, it was in the history of the planet Earth, we got to $65 trillion in market cap in, a couple of hundred years of trading.
Right.
And now, a year later, we're at 100, 54% higher. It's not just irrational, it's unsustainable. The money doesn't exist. There's a notional value of the markets. This money wasn't created. We didn't create $35 trillion of new value in 12 months in the global economy. It's not even close to possible. The entire global GDP is $80 trillion. So you would have had to have bumped up the global GDP
But
like
the whole
40%.
thing is, I think one lesson that you should have learned by now over the past 18 to 24 months, this is in fact a momentum-driven market. And it sounds flippant to say it is what it is till it's not anymore, but it is, right? There's so many fundamental and technical ways that you can argue this run-up, but it seems to be as if momentum is the only thing that matters right now in this market.
I have to say that's wrong, though. I understand what you're saying. I understand a lot of people say that because everybody wants to justify why a market's rallying, why you're in a bubble. Oh, this won't be, it's not a disaster, whatever. I'm telling people right now, we just issued a statement today in our newsletter, get out. There was that horror movie, Get Out? And only one time did the guy say, the line of the movie, Get Out, the one guy said it to the guy right at the beginning of the movie. He said, get out.
Well, everyone said get out at the end of last year, too, because they were concerned about Trump's first 100 days in office. So
I'm just that one guy.
Kind of goes back to my argument.
It could be early in the film. I don't know.
Right.
I'm the one
But
guy.
even still,
I'm
if you've made 30% being long this year, okay.
Take it.
Right.
Take it and run. If we're still rallying next year, then I'm wrong. I think we're going to start going down in January. If we're still rallying next year, then I'm wrong, and we take the money that we took out and we put it back in and we buy some more stuff.
Right.
But if I'm right and we drop 20%, which is what I'm projecting, then you'll be damn glad you have your cash on the sidelines.
And then you can also buy stuff at cheaper levels, too.
And you can buy stuff, and there's always things to buy at a bargain. There's plenty of great stocks to buy that are cheap still.
Right. All right. Well, thank you very much. We'll see you in 2018. And traders, as always, thank you for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.